The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 361, Nasdaq up 136, S&P's up 42. Gold contract up $30, trading 18.10 an ounce. You get silver up $1.11, $23.70 an ounce. Copper's up another 7 pennies at $3.50 a pound. Copper, folks, is a monster breakout. It just blew away its 2011 level. I mean, copper wants to go to $4.50. So that commodity bull, folks, is running. Notes and bonds. 10-year note right now down 15 ticks, trading 137.22. The 30-year off a point and a half at 173.14. And the culprit is right over here. Good old King Dollar. It broke its low yesterday, got above it, rejected the low yesterday, going after it again this morning. This is going to be really intriguing because we are right at it. But my take, we're going to 88. Right now, you're at 91.714. The euro is at 119. The yen is at 104.56. And the British pound is at 133 to 1 U.S. dollar. Tom O'Brien, happy December.
Happy December, man. Picking up right where we left off.
Well, it makes sense. It's Christmas. It's green, right?
Hey, the Russell was up 20%. Last month, right? Well, why it's on pace for 30% this month through one day.
You gotta love it, man. Let's go over to my man, Mr. Kevin Hinks at TD Ameritrade Thinkorswim, as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. If you want to understand the option market, option strategies, futures, outstanding program, defined risk. Great program. If you haven't test-driven yet the Thinkorswim platform, very easy to do. You're sitting on the website, hit the banner, bring it up. That allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Hanks, what's going on?
Good morning, Tom. Good morning, Tommy. Yes, guys, happy December. You know, I'm telling you, that means a little bit different here in Chicago than it does in beautiful, sunny Florida.
Yeah.
I'm going to tell you right now, December brings a little bit different. It's about 29 degrees here this morning, guys.
Well, Kevin, yeah. I hate to say this, but we got a cold spell last night, and it's like 72.
Yeah, you're killing me. So your December doesn't mean the same as my December.
No, it certainly doesn't. I know.
72. Well, I got to throw out, it's like 50 degrees right now. Have you been outside? Are you just bundled up? It's 50 degrees out in Tampa today, but nonetheless.
You know what's going on? I think it's the same. It's warmer in St. Pete or something.
Okay. Kevin, I don't know what's going on, but it's 50 degrees in Tampa today. It's not 30, though.
We kill for 50 degrees right now.
I know, and it's beautiful. We love it, man. We're very fortunate, for sure, man.
Exactly. So, a lot of data out this morning. How about this, guys? Redbook. Redbook comes out 7:55 Chicago time, 8:55 Eastern time every Tuesday morning. And Redbook, it measures chain stores, discounters, and department stores, okay, and traffic into those stores. The Redbook number comes out this morning up 9.2%.
Amazing.
Think about that now. Traffic, that measures this last week over a year ago last week.
Wow.
So traffic in stores last week was up 9% year over year into these chain stores, department stores, and discounters. Think about that. In terms of where we sit with everything going on in the pandemic and the coronavirus and the current state of the economy. That is a massive number that came out.
You know, it's amazing, man. Is that just like you're talking here, it's almost like we've lost track of about 7 or 8 months, yet knowing that, and then it's hard to get my head wrapped around. And I look at Main Street, and I'm looking at these smaller businesses, they're going to be out of business. And then the larger businesses, though, in general, are booming. And right. I know myself, I'm not going to stores, but, you're clicking, it's like, okay, click, click. And we're so used to now, I'm going to have a hard time, I think, going to a store to buy even anything big. because it seems like it's much easier now going online for even the big things, which is just the opposite of where I was a couple of years ago. Do you know what I'm saying? It's like, hey,
right.
why am I going to go lug something?
Buy it, Tom, from brick and mortar store. You go pick it up curbside.
Yeah.
You're barely going in the store. You're still looking at those places, but you're looking on their website. You're clicking on that and paying for it and then picking it up outside the building. So very interesting.
Yeah. The number that Adobe had out there was 10.8 billion just for yesterday, up 15%. And I saw that number come out, and I said to myself, man, do you remember when they started talking about, and I'm going back 15, 20 years, like, oh, geez, are we going to really be comfortable doing business online? And it's like, how about doing $11 billion in 24 hours online?
Right.
It's like, that's amazing. Yeah.
Now we're more comfortable doing it online than going to the store.
And get my pajama pants, a T-shirt, some socks, maybe some hot chocolate, and pull up Amazon, Target, Walmart, Kohl's, the whole deal. Totally.
I know.
Still a good week, good solid week for earnings that we're having. We talked about a lot of the names coming out. Obviously, today the focus will be Salesforce.
Yes,
that's what we'll be talking about. We'll also be talking about NetApp and Box. It's still a good week of earnings, even though the names are a little more thin than normal. Like today, we'll get Salesforce. That'll be the focus of today's show. Tomorrow, CrowdStrike. Then we get Kroger and Dollar General. Oof. We got DocuSign is now emerging as a really fun stock to trade in terms of options and movement.
Yes.
So even though we're late in earnings season, guys, it's still the best time of the year because it's still a lot of activity in these names.
No, that's a huge amount of activity, particularly just as you said. What happens, folks, is that there's certain equities that move quite a bit. So when Kevin and his team's teaching these option strategies, it's very important to understand that, which is so cool because you want movement. That's the bottom line. And they certainly move. I mean, Kevin, it's actually amazing the movement that we get on many stocks now. Not just, remember it used to be just a handful of them. Now the bottom line is that 5 or 10 points is nothing. In the context of where you can go, which is pretty cool.
Right. And yesterday we traded Zoom. If your viewers listen to the show, we did a trade that looked for movement. We bet on movement versus non-movement.
Yes.
And, of course, it doesn't matter how good Zoom's earnings were. The stock's down $59.
Right.
And so we played for outsized movement, and we're getting that in that name.
How cool is that, right? And that's where these strategies come in. And, folks, if you haven't listened to the program yet, you got to listen to it because everything's going towards the option market. Whether it is. I mean, Kevin, when you look at it, I mean, I know that's quite a statement, but the reality is it is. It's like, why would you not trade options when you're putting up less money and you have better defined risk? It's like...
I agree completely, guys.
Yeah. Unreal.
Obviously.
Yeah, I like
it. You're talking his language. There you go.
That's right, man. We all want to talk his language.
I agree.
Like
trading for sure. Investing, buy me some stocks. Trading, buy and sell me some options. Man. There you go.
Totally. Right here, folks, 45 minutes from now. Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thank you. Stay right there. Tommy and I are coming right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now up for 416. You get the Nasdaq up 143. S&Ps are up 48. And Apple, Tom, Apple's putting juice under all these indices, man. I mean, it's more than Apple, too. But the bottom line is that it doesn't take much. You know, Apple, yesterday we had, what was it, 116? You're at 122 today.
Yeah, I mean, that's $6, man. You're up 4 to 5% in that stock in a heartbeat. Market cap wise, just huge numbers you're talking about.
Totally. Yeah. And if you want to see something that is pretty amazing, folks, okay, you don't see these often. And this is Moderna. Moderna is like a perfect three gap play. And what a three gap play, folks, is that you get basically three gaps, and the last gap is normally an exhaustion gap. You know, and so this is pretty wild, man. I mean, you don't see these often. Now, the way this is set up, this is what's going to get intriguing here, folks, and I'm not telling you to go short the stock. The way a three-gap play works, if in fact it works, okay, is you get the three gaps, then you give it up in spades, and you go all the way back to the first gap. Then what ends up happening, whatever way the gap was going, that is actually where the stock wants to go to. So if you're not in Moderna and you want to be in the future, just have some patience, man. So
I would definitely have some patience, considering we were just at $70 and now we're at 170.
No, exactly.
But that's a great point. Exactly.
Exactly. And you know, I was looking at the options. In the money options are $25. So the bottom line is that they get some volatility priced in these. Well, now they're $25. The spread is 170. The spread is like 20 by 22 I got right now.
I mean, there's a lot of strong stocks. Now, it's been tough to get into some of them, right? Apple gave you a chance, though. It definitely did. So Salesforce, just for instance, I mean, they're out with their numbers after the bell tonight. They just went from 285 on that flash high in September.
Yes. We're
at 240 right now. Now, a lot of that having to do with their purchase in Slack. But they're pulling back. And then Zoom. How about the action in Zoom today, right? Down 12%. You were at almost 600. You're now at almost 400. You saw this happen, with quite the slide.
Right.
But again, some patience. You don't have to get in. But this company, Zoom, man, I was thinking to myself today, their numbers. $777 million in revenue over 694. They make almost $1 a share versus 76 cents. I mean, one of the numbers, revenue growing at 367% on an annualized basis in the quarter. And that's, I guess, a slight decrease or, not quite maybe what they wanted to see. But you're talking about approaching $1 billion of revenue, man. And people like to throw around like, oh, maybe Zoom's going to be the bubble, and this and that. It's a different scenario. These are strong companies with some big numbers. And they're getting ahead of themselves, though. They are.
Right. And what you just brought up, this is so cool, folks. Zoom has made money almost right from the get-go. So the differential is huge.
Yeah, already profitable coming into COVID, right?
Yeah, exactly. So that's pretty impressive, man.
And check out this for Zoom. And I have some Zoom, so I'm buying it. But this, and again, I don't even know if I'd buy it here. It might pull back from here, right? But the lesson is, if you want to be in some of these companies, man, you just got a 30 to 35% pullback from where you were.
Right.
How about in the quarter, they had 433,000 customers with over 10 employees. That's exactly where they're making their money. They have almost 500,000 customers with over 10 employees. That's your bread and butter, man. That's businesses who have built-in costs in their budgets. That's up almost 500% year over year, and higher than the 355% growth from the prior quarter. That's their earnings, man. Is companies, big companies, right? And I guess you could call them middle-sized, small companies, even 10 to 50 people. But it's not one person running a company that has Zoom with 4 people. It's people who are communicating, 10-plus employees that are going to be paying for that service.
Exactly. Because we all have to get used to that, folks, okay? And the quicker that you get used to managing like that, the quicker, whether it's a small business or a big business, is going to get acceleration. Because that's the world we're in. And productivity-wise, I can see where it's at, because the bottom line, if people can stay home, they're saving probably an hour and a half a day. Well, that's you start adding that up, man. That's good lifestyle, man.
Straight away.
Whole different ballgame.
Right. It's, not to call it wasted time, but it's pretty close to wasted time
in the car.
Now, sometimes it's enjoyable. You start your day, you get a slow ride, right? You have a little coffee, you listen to some music, start your day. I enjoyed my ride. I would listen to TFNN. If it was late enough, I would listen to Bloomberg. Start your day a little slow, ease in, but you can do that at home too in a much more productive fashion, man.
Totally. Let's go take a look at the dollar. The dollar, folks, has been struggling for a long period of time, but it looks to me like, guess what? The struggle is over. It's just going to give it up. And, yesterday it basically got down into the lows, broke the lows, rejected the lows, and then right here this morning, right back at it, man. And with 91,746 is the number. And right now you're approximately 175 points, ticks below it. But my take is that this thing's going to get blown away. Well, we get 80 coming at us, 88 coming at us. You break 88 and you're really going to get some action. And if we go over to copper, you can this copper has been like the canary. And what I mean specifically, folks, copper has been on a tear for 6 months. And if we take a look at this, you're going to see it's just not stopping. And iron ore is not stopping either. But you're going to see copper wants all-time highs, man, which is 450, I think. And right now we're at 350. We're at 348. And that spike up there is 464. So we just launched the 2011 deal. And it's pretty weird when you think of time that, that's 9 years ago, right? It's like, okay. So it is what it is, folks. And
that's how it goes.
This thing's moving, man. And if, that's moving, and the dollar's breaking down, bottom line, this commodity bull, I think, is on, man. That's what it seems like. And most times when this happens, and I'm relating this going back to 2001, most times copper is the first one that started there. And then, Tom, of course, we were talking with Ed Young all the time.
I heard you mention him on your program the other night. Yeah,
and he taught us so much about that market.
He sure did.
And, copper then, folks, was running at 62 cents, 62 to 70 cents. And I remember him saying that, we're going to go to $1.50. That was crazy. But the bottom line, that's what ends up happening. That's the beginning of it. Then iron ore has caught, I'd say we'll see what happens with oil. I mean, oil went. And if you get a real breakdown of the dollar, as we're talking, it's breaking down more. See, this dollar today, I think you're going to get the price spread on the dollar today, folks. I think that's what's going on. Because we had the rejection yesterday, and as we're talking right now, this dollar just went down 75 more ticks, Tommy, in a minute and a half.
Okay.
So if that's what you get, hold on for the ride, man, because, and it totally makes sense, too. I mean, even on a fundamental basis, because the bottom line is that we get the lower dollar, we're going to sell more goods overseas, so it's going to keep things going. That's what's so cool about being in the market. There always seems to be something. You get this, that makes the market go up. Now, all of a sudden, the dollar will go down. That'll make the numbers go up, okay? There's always something happening, folks.
Hey, and we got to look at Tesla afterwards because that was huge last night. But the action today, man, Tesla's diving negative. Wouldn't it be interesting if last night was actually the news that you'd sell?
Wild.
We'll see.
We will. Yeah. Stay right there. Tom and I are coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now up 414. You get the Nasdaq up 128. S&Ps are up 48. And good old Tesla. So what do we have here? Let's take a look. We have a high out here today of 597. We're laying out at 581. Man, this is going to be this one's going to get out in the history books, folks, as to like how this is going to shake out when they come into the S&P. Because
Never been done before. It's
No.
a first, man.
Right.
I mean, they're either the 6th or 7th largest company, depending on the day and how things are moving, I think. Right between Berkshire Hathaway and Visa. And you're talking about approaching $600 billion. You have trillions of dollars in S&P funds that have to do this. They have to do it on December 21st.
Yeah.
I was reading about it last night. I mean, it just makes sense. If you're a benchmark fund, you can't just say, let's just get ahead of the craziness by a few days.
That's right.
Tesla could sell off $200. I'm not exaggerating.
Oh, yeah.
And your results would never be close to achieving the S&P.
Right.
So they all have to come in at the same time. Now, in normal fashion, right, what would happen was other market participants would pick up the slack and keep the supply and the demand somewhere in the neighborhood of appropriately reasonable. But if you have $600 trillion, are you going to have that many sellers that the stock doesn't go through the roof? Now, here's the other side of it. Maybe everybody already knows this, man, which is why it just traded from 270 to 600 on nothing but a stock split and an add to the S&P 500, which have nothing to do with its business. Now, that happens, right, because they're big moments. You split, that's historically, the stocks go up, you get added to the S&P 500. That's automatic demand. That one definitely makes sense, for sure. But it doesn't actually speak to the value of the company in the long term, which is how companies should be. Facebook got added to the S&P 500 7 years ago now, and they sold off 10 to 20% after they got added. Okay, so buy the rumor, sell the news. But it doesn't normally happen where we've now seen hundreds of billions of dollars in extra equity added to this equity. It's usually tens of billions, right? Or something like that. So hundreds of billions of dollars, that's what can get sucked out on the other side when the market figures out, hey, we have to wait a little while for all of this, $600 billion market cap to come to fruition.
You know, the bottom line is that there's no such thing as too high, folks. That's what we're really talking about. So we are all going to get a lesson in this. I mean, I can see. I agree. I can see this thing seriously go exponential like we've never seen.
I'm surprised by today's action in Tesla, though. That's the only thing that kind of made me think about it, because we're at where we were trading at 2 or 3 yesterday afternoon, and I started saying, wait a second, if you can't even move the day after, because that was an unknown. Is it going to get added once or multiple times? And they said, you know what, we're just going to do it like it's done, man. We're going to add it all at once. That's how it's supposed to be. We're going to do it. And I said, oh, man, this thing is going to at least rocket tomorrow, right? Because now everybody knows that everybody has to add it on December 21st, which is 3 weeks from yesterday. It's a Monday. So is somebody going to add Tesla on a Friday? You want to hold that over the weekend when you want to bench? They're all going to add it, and it can't catch a bid. And I said, wait a second.
Listen, you're going to love this, folks. And that's quad witching, you know. That Friday, listen to this. This is how sick this gets. That's going to be the third Friday of the month, and that's quad witching.
That sure is.
This is going to be
sprinkle some Tesla S&P onto that volatility.
Totally, man. You know.
So what's that? December 18th, folks, Friday. 2 weeks from this coming Friday.
Yeah.
Because Tesla, man, it's you just dropped $25. I mean, I don't think the market's ever seen the type of market cap. Do you remember when the market was talking about when are we going to see $1 trillion company? Right?
I know. And that was
Tesla
a big deal.
just added $200 to $300 billion on basically fairy dust of a stock split and an S&P ad that everybody knew was coming down the line to the S&P 500. Okay, so that's not shocking revelation that they discover. You know, they splice the atom or something. That they're okay. So it might all. It's just the most talked about stock ever. Maybe now the other side of it, which is why I'm not, selling it with every dollar I own, is that if people are out there buying it, man, it don't matter.
No, it doesn't matter. You know what would be really cool is that if he does another secondary like at these prices.
I don't blame it. I talked about it on my show today because the last one he did was at 500. Well, we're sitting at 600.
Right. And, well, did he do the 500? Is that after the split?
Yeah, so if you recall, they announced the split on August 11th.
Yeah.
Okay. You're at 270. Now, you trade up to 500. These are post-split numbers, but you trade up to literally 500 on September 1st. The high being, what do I have? What is I high? 502.49. And that's the day that they came out and said they were going to do the offering, right? And you proceeded to fall from 500 down to 329 in the span of 7 days. So, yeah.
Unreal.
Yeah.
You know, it's going to be a ride. And, you know, if we talk volumes here, now, so check this out, folks, okay? Yesterday, well, we've had volumes that are extraordinary. Yesterday, inside the composite, he did 7.6 billion. Now, that's insane. We're at 2.2 billion now. So what's so cool about this is that I think what's going on here, Tom, is that money managers are already moving around money, so they're going to have money so they can buy. This is just a tough one to really kind of understand. Do you know what I mean? Because we haven't seen, this is like an extraordinary amount of volume, man. I mean, 2.2 billion. What is it, 10:30 in the morning? It's like, you know, so they got movement, man. And my take in the NDX, folks, is that we're in the markdown period. I know it's higher today, but my take is that it's markdown. But I think in the context also, fundamentally, we know that if you're reading these articles, folks, what does happen is that money managers have to have money to buy Tesla. That's the bottom line. And they got to sell stuff off. So,
okay.
And that's not, I'm not even talking about the aspect of the people that, in their perspectives, they have to benchmark it, as Tommy's talking about. When you benchmark it, they have to do it that day. You can't do it before.
Right.
There's so many copycats, however, that they can do it whenever they want to do it. Do you know what I'm saying? That if you have a fund that is mimicking the S&P, which is thousands of them. There's thousands of them. We're not talking hundreds here, man.
Sure.
You know, so...
It would just be interesting. Maybe all the speculators, man. I mean, there's been so much speculation from 270 to 600, right?
Oh, yeah.
Are you really do you want to hold for 3 weeks and wait for to be a holder, right? December 21st? I don't know, man. If I had some good profits and we're at 600, I might just take it right now. The news is out. Now there's no unknowns. We know the date. Everybody knows it. Maybe that was the buildup. Like I said, maybe this is sell the news. Boom, there it is. You got your pop. You're back at 600 again. We didn't quite make it. But man, you're at 600. We just doubled the price from a few months in this equity on no fundamental news of really any sorts.
Let's get over to the NQs right now. They're selling the NQs down, man.
Yeah,
these NQs,
the whole little market's getting.
These get interesting, man. You know, when they sell these babies down, they like selling them down quick. Look at this thing.
Right.
Oh man, I love the market. So we just went from 432 to 360. You know, and the bottom line is that you're going to go right after this. The opening bid there, you know, that's a high volume low. So we're going down there, folks, which is 312. And right now you're at 362. Stay right there, folks. Tommy and I are coming right back. Our phone number is 877-927-6648. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. Educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials up 361. You get the Nasdaq up 91. S&Ps are up 40. Let's go and take a look at Progressive, a couple insurance stocks for a couple of tigers in the den here. PGR. So we get Progressive first. We all know Progressive. Those ads just never stop.
I'm a Progressive customer.
Yeah, me too. I got my insurance bill yesterday. I couldn't believe it, man. But already looking at the chart, I'll tell them to buy it. So the low for the year is 62. The high is 102. You're trading at 88. And let's see, it's a small dividend. Okay, so you're coming back to a breakout area. Let's see what we got here. Well, I mean, I like the setup. That's a high volume. You know, it depends if you own this, you know, you're coming back to the breakout area. The breakout area was in, what's that? Oh, man, July. And that's what normally happens, man. You know, the stock goes all the way up to 97. I mean, it goes up to 102. You back down, you know, bottom line. I suspect you're going to build some cars here before you go to higher price. I wouldn't sell it. That's the bottom line. Revenue, they're going to be coming out. Well, they must have already come out because January 31st is the next one. And then the second one that they want to look at is PLMR. PLMR. And, oh, look at this. What is this? This is different. Provides insurance services, legal protection. This is not the same type of setup for sure, even though they're in the insurance business. Oh, I see. Interesting, though. So, yeah, it is the same setup. Going back to a breakout area. Yeah, I mean, wow, this is wild, man. So all these insurance companies have come back quite a bit, man. Yeah, 60, I mean, the bottom of this 61, you know, that's a breakout area, too. And let's see, do they pay a dividend too? The other one paid a 0.5% dividend. No, there's nothing there. I like Progressive better than the Palomar, that's for sure. So Moderna is the NDX. Watch Tom, when that NDX just went south, you're going to see, well,
Gave back.
It gave it back, and then it just came back, popped up again. So let's take a look. Yeah, I mean, it's got down to 150.
It's nothing. I mean, the moves are just so magnificent on that chart. It skews how fast it just moved since the open. But you're down more than 10%. Just so if you bought like that spike high on the open, you're down 10% by 10:45 in the morning. So yeah, that's
Pretty
staggering.
Get your head wrapped around.
It looks like a marginal pullback on the open because you just went from $93. I mean, I like pulling up 15-minute, 5-day charts.
Yes.
$93 is on my chart, so a $17 move doesn't look that big.
Isn't that wild?
Yeah. And how about Nikola? Can we jump over to them?
N-I-K-A, I think. You know?
NKLA, I believe.
NKL, there it is.
So yesterday was the deal with GM trying to save a little face, I think, some type of a deal. No equity stake. The stock trades lower. So today the headline is insiders get to sell their shares.
Oh,
The biggest of which is the founder, with 91.6 million shares, putting his stake at almost $2 billion. Not bad when you get to run away from a company when they allege fraud, and you say, that's fine, I'll take my billions of dollars and move on because I'm going to sell them December 1st when I can. He didn't say that, but folks, with everything going on, why would you not if you step down? You know, you step down as CEO.
Oh, for sure.
91.6 million.
Holy
Insiders
cow.
alone control 166 million, and that's out of only 360.9 million shares. Staggering numbers when you look at what the insiders own, and in light of what's going on in this company, that you better be worried about people getting out of this company when it's still got a market cap that's pretty staggering, man, for everything being alleged at this point. And what is the market cap as I pull it up? You're talking about
and
$6.7 billion, you know?
Right. And this year, just so you can get something really straight, folks, I suspect most of us can, and anyway, they take in $72,000 for the whole year.
Well, market's valuing that company at almost $7 billion. And it's not just taking it. It's the allegations of all their future promises might be lies. That's the worrisome thing when insiders. Normally, these types of allegations are figured out before insiders' lockup period has expired. So that's an interesting one as well.
Seriously. Let's get over and take a look at because you just reminded me of something here, which is pretty cool. Platinum, folks. Okay, so platinum, has been a disaster for a long period of time now. That being said, and this is where it reminded me of it, when they did GM, they're going to do something with the hydrogen, right? So if you're a believer, folks, in that we're going into hydrogen, right, this is where this gets really intriguing with platinum. Because, so platinum, until about 10 years ago, was the main ingredient in catalytic converters, especially for the big diesel trucks. They changed it to palladium because platinum was too expensive. Well, now palladium's gone through the roof, okay? But now let's put that one off to the side, okay? And we'll see whether, the big makers are going to change back to platinum. But hydrogen, okay, so check this out. Hydrogen, if that's where we're going in the future, uses 4 times the amount of platinum as the catalytic converters, okay? So the demand side of platinum could be the most that we've seen in decades, not, if in fact the hydrogen clean energy is going to go forward. So it's going to be really intriguing, man, to see if in fact, because what the difference is, folks, platinum's a very precious metal, but if you're using it in industrial uses too, that's where the demand goes exponential, and that's when the prices go exponential. Because it's amazing to me that palladium actually, went over $2,000. I mean, but guess what? You use it. That's how it works, man.
Yeah, this market, we'll see, man. It's a little bit of a pullback.
It's shaky.
Yeah.
It's a shaky market right now, and that's. You got to remember something. That's pretty unusual on window dressing. And the market has every right today to go big time. It did, and it's like, okay, why are you getting so shaky, man? Why is it? It's a little nervous.
If I was any type of an investor that was not a long-term investor, right? Even when you're talking about retirement, man, you need funds in the next year or two.
Yeah.
You're up. We're now up, what is this, 440 points in the S&P. So you're approaching 13% for the calendar year 2020. That's a dicey one when you start getting into some of those territories when we know the next 3 or 6 months are going to be, status quo from where we are right now. Even if the vaccine starts getting pushed out, which are reported maybe even, to some of the first people later this month. But we got some time, man.
We do. Dow Industrials are up 349, Nasdaq up 101, S&P's up 40. Stay right there, folks. Tommy and I are coming right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down. Dow's up 354. Nasdaq's up 105. S&Ps are up 40. And we just got to get over to that dollar, Tom. So you get a real break here, folks. The bottom line is that it's getting away from the lows. You're down 416. 88's the next number. Now, it was so cool about this, folks. Also, if you do the ABC down, it comes to 88 too, just from the aspect of where we were 6 months ago. So. We'll see how this shakes out, but this is a decisive break. And
quite a move from June, man. 98 to 92.
Isn't it? And
yeah.
Look at that move right there. So someone just sold into it big, And that's what happens, folks, when you have built cause for a long period of time, and it's teetering, and then all of a sudden some big dog says, hey, you know what, man, that's it. Bang.
And you know what we didn't talk about that much is we had Chairman Powell in front of Congress today and tomorrow, right?
Oh,
so I'm not sure if that's part of the CARES Act, I believe. Some of his statements out today saying pretty much the same. They need those programs, even though Secretary Mnuchin is saying not. I talked about on my program today, man, comparing it, right? They have the backstop going on for the loans, and the argument from Mnuchin is that they haven't even used the money, so they don't need it. I said FDIC insurance. I'm not sure if you were listening. It's a perfect example. I was talking to my friends.
It is.
It never gets used because it exists. That's the same thing that Chairman Powell's arguing. That it is working because it exists.
Right.
You don't use FDIC insurance because the fact that it exists alone prevents a run on the bank which would then have to use FDIC insurance. If there's no FDIC insurance, there'd be a run on the banks. Just because it exists, it's not getting used, doesn't mean it doesn't serve a purpose.
And what had happened, and this is so cool what you're talking about, Tom, because at the crash in March, when it happened, bonds got killed.
Sure.
And because they knew that the Fed was going to come in, when the Fed announced it, they never used any of that money, and bonds went to the moon.
Exactly.
Stay
The
right
insurance
there.
itself liquidated everything.
It did.
So there
Stay
you go.
right there, folks. Think of Swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. Oh, don't forget about Larry. Larry's doing a live.
A week from tomorrow.
Yeah.
The front page. That's
Thanks,
right.
pal.
Thanks, man.
Okay.